Welcome. In this video, where will ZBCN coin price go? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the strongest formations on the chart is the ascending triangle pattern, which is considered highly reliable in technical analysis and often breaks in a positive direction. This structure clearly demonstrates the strong willingness of market participants to move the price upwards and the determination of buyers to build higher lows over time. On the chart under review, this pattern is clearly formed. The lower line is consistently producing higher lows, while the upper resistance line is acting as a horizontal and strong barrier. However, technically in such symmetrical structures, the price usually can't withstand the pressure any longer and at some point breaks out to the upside, transitioning into a strong uptrend. Ascending triangle patterns are considered to be a structure that fundamentally tips the balance of supply and demand in favor of traders, often setting the stage for strong price attacks. The underlying logic of the pattern is as follows. The price forms a higher base each time, indicating that buyers are dominating the market. At the same time, every time the price approaches the upper resistance level, there is a retracement, but these retracements are now coming from higher up. So, sellers are finding it difficult to hold this level. This tells us that the pressure is now concentrated on the resistance zone, and a sharp breakout could occur with the slightest increase in volume. In the current pattern, the price action trap just below the upper line suggests that traders are patiently waiting for a breakout and waiting for the right time to buy. An upside breakout of this level on volume would signal that the pattern is technically complete and buyers are in full control. In such a scenario, not only a short-term but also a medium and long-term bullish wave could be in the offing. In ascending triangle patterns, the breakout direction is usually upwards, and the target after the breakout is usually an increase in the height of the triangle. In the current case, once the upper line is breached, these technical targets will come into play and the price could potentially make a significant jump. This breakout usually attracts the attention of large traders, and the market moves to new highs with a wider range of participants. One of the best strategies is for traders to be patient and wait for a breakout in such ascending triangle patterns. Because once the pattern is completed and the breakout occurs, a rapid price increase is usually observed within a very short period of time. This is a very productive time for investors looking for an opportunity to buy. The fact that the price is currently moving close to the upper resistance is a very critical and positive development in this sense. Developments from this point may enable the price to enter a new bullish phase. Another thing to keep in mind is the psychological impact of such patterns. Such squeezes and repeated tests on the chart attract the attention of market participants. Thousands of traders interested in technical analysis may see this structure at the same time and want to take positions in the same areas. This leads to multiple buy orders as soon as the breakout occurs and the upward movement gains momentum. This synergy often leads to significant price movements in a very short period of time. Moreover, ascending triangles are often supported by strong fundamental or news flow. If the price manages to break above this technical structure, it also indicates that confidence in the project or asset is growing. Market players have positive expectations for the future, and investors' appetite for risk has increased. This overlap of technical and fundamental dynamics contributes to a healthier and more sustainable upside potential. But we can't decide the analysis based on the pattern alone. Let's look at other metrics. Stay tuned. Elliott wave theory, one of the theories that suggests that price movements in the markets follow certain patterns, is a powerful tool for traders who want to analyze trend reversals and wavelengths. In the chart we are currently analyzing, there is a remarkable structure in line with this theory. First of all, the price action has performed a classic ABC correction from top to bottom. This correction is usually regarded as a temporary respite from the main upward trend. The retracement starts with wave A, a temporary rebound with wave B, and finally a test of the final lows with wave C. At this point, the correction is considered complete and preparations for a new bullish wave begin. With the completion of this correction, we observe the start of a brand new series of impulsive waves in the market. The first wave has already formed, and the second wave seems to have been completed with a relatively short and shallow correction. This may indicate that market participants have strong upside expectations and sellers remain weak. Now we turn our eyes to the third wave. According to Elliott wave theory, the third wave is usually the strongest, longest, and steepest rising wave. It usually reaches a distance of 1/618 times that of the first wave. However, in some cases, especially when there is high demand and strong momentum in the market, this move can also last up to the 2272 Fibonacci extension. These levels are not only numerical targets in technical analysis, but also psychological resistance areas. Traders' expectations, market sentiment, and buying volume are decisive in reaching these levels. There are important signals in the chart that set the stage for the start of the third wave. In particular, the increase in volume in the first wave and the completion of the second wave in a short time with low momentum show that buyers still dominate the market. In this case, the third wave is not only a technical necessity, but also a natural development in terms of market behavior. Moreover, the point at which the third wave begins is often considered an opportunity zone for investors. This is because the market may not yet be recognized by the wider masses. By the middle of the third wave, news flow, social media attention, and general market awareness increases. This triggers more investors to join the market, and therefore the uptrend accelerates. In this way, the target levels predicted in technical analysis may cease to be mere possibilities and become realistic targets. Especially when chart structures with similar patterns in the past are analyzed, it is seen that third waves often pave the way for big gains. During this wave, FOMO kicks in, and buyers take control of the market for a while. This control can push the price beyond technical targets. The Fibonacci extensions of 1,618 and 2,272, the target zone here, are important resistance levels followed not only by technical analysts, but also by algorithms and large investors. Therefore, profit realizations may come when these levels are reached, but it is quite possible that even these realizations will create a new support and create a power-gathering effect for the fifth wave that may follow. Another positive aspect of this structure is that it is in line with the general direction of the trend. If the underlying trend is up and the correction has been completed in a healthy way, the wave sequence that has just begun is more stable and secure. This makes the third wave more valuable both technically and in terms of investor psychology. In conclusion, in the current structure, the first and second waves after the ABC correction, which started from the top, seem to be the harbingers of a very positive and promising third wave. Technical indicators, volume behavior, and Fibonacci levels support this prediction. The Vortex indicator is one of the most effective and powerful technical analysis tools for measuring trend direction and strength. It helps to understand the dynamics behind price movements, especially when it comes to predicting the start of an uptrend or downtrend. The two main lines on this indicator, usually represented in red and blue, offer extremely valuable clues as to which direction the market is likely to accelerate. Looking at the Vortex indicator on the chart currently under review, it can be seen that the red line is located above the blue line. This usually indicates that in the previous period, selling pressure dominated the market and negative momentum was more pronounced. However, there are some signals that this situation is about to change. The blue line, the positive vortex line, is slowly heading upwards and approaching the red line. If this movement continues and the blue line crosses the red line to the upside, it will be a very positive development. Vortex shows us the trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.